What is going to be something that can shake us out of this little funk that we've been in?
That's a good question. It'd be nice to have just a few days where nothing happens. So that would be the first thing. Then people could focus on the dynamics that are going on.
You've been invading my dreams.
Well, I'm not sure what to even say about that. but you know, if you look at the fundamentals, you look at payrolls, you look at claims, all the data is pointing towards just a very healthy economy in the U.S. for a long period of time, and that actually could be, you know, encouraging people to be a little more aggressive in their stances, because if you think you have the strong hand, then you want to play it.
You know, I hear you, and it's funny because we have all the numbers are on your side, all the conversation is on your side, all the facts and the stats are on your side, but it's beginning to feel more like an emotional market, a market driven by the headlines.
Well, it is, because how do you quantify any of this? You know, you can run
That's your job.
Well, you can run the trade risks. You can figure out how much it'll cost us. You can do all that, but assigning probabilities to it becomes very difficult, because a lot of these outcomes are binary. It's either going to be nothing, or it's going to just be a massive problem. And you know, if you assign the wrong weighting to each, then you're kind of in the bad spot. You end up with something where you almost know you're going to be wrong, because it's going to be one or the other, and no one's willing to choose, so you assign the probabilities and you end up somewhere in the middle, so you know you're going to be wrong.
And you're the perfect guest, I think, because your job at Metlife Investment Management is to make sure that capital, it's not the return, you know, on capital, it's the return of capital in some ways. Keep the money safe. In this kind of a market, what are some strategies then that you are employing just to maintain sort of that even strain?
Well, you know, we can invest in a variety of different things that maybe not everyone wants to invest in or can invest in. And, you know, we also have a longer term outlook. So, you know, you can look at private assets. You can look at some.
What does that mean, private assets?
It's basically a credit, but you've actually gone to the company itself and kind of just managed the loan.
So you've been picking a little more on the corporate debt side, effectively, corporate loan side?
You can. You can, and you look for things where you get a little more protection and maybe pick up some yield at the same time, because you're giving up liquidity. You know, we don't need liquidity; we have enough liquidity. So you know, you look for kind of how do you pick up yield in other ways. I think trading liquidity is great, because I think if there's another crisis, everyone who's in the public bond market is going to realize that the liquidity just isn't there anyway.
How about this? Back it up just a little bit. I'm sure you get this question all the time. I know even we do. Some of my colleagues have talked about this. You know, people see us and they say, hey, should I sell stocks? I've made all this money over 9 years. Trade war, I'm nervous. Is it time to just sort of dump the U.S. stock market?
You know, we don't spend a lot of time investing in equities, so I'm not sure what to say about that one either. I think the fundamentals look good to me. We do have models of the S&P. You know, they look pretty good to us, but they are all based on economic fundamentals. They are not based on emotion, and we all know that emotion plays a key role in the U.S. equity price.
Is there a way, when you guys get together and you talk, I mean, is there a way to say, how do we quantify all this trade war rhetoric? It's just rhetoric now. So, I mean, you can't just plug that into an Excel spreadsheet.
No, and as I said, the issue is in some cases you have a binary outcome, and you know you're going to end up somewhere in the middle, which means you're going to be wrong.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.